Very good afternoon to you, everyone, or good morning or good evening, wherever you are logging in. Welcome to our quarterly Renaissance Services SAOG analysts and investors and brokers meeting. Thank you all for attending. You have with you the CFO, Juma, and the CEO, Steve. We're here to answer your questions. You've seen already our results for the first quarter and our chairman's statement that accompanies it. We see in that the fundamentals of our company remain strong. Revenue is up. We continue to grow. It was a difficult quarter in terms of the quality of margins, in the sense of some of our highest margin revenues from occupancy-driven revenues in our Renaissance villages was under some pressure, and that's brought the margins down slightly, as well as some other seasonal factors described in the chairman's statement. But we remain very positive about our growth paths. You saw in the chairman's statement the very specific, and it was stated in our annual report as well, our focus on M&A opportunities that is pressing ahead. We're actually speaking to you today from our subsidiary in the UAE, Emirates Taste Services, and we're now open to your questions on whoever would like to go first with that first question. Thank you. Please just raise a hand if you would like to ask that first question. Yes, Bishan, please go ahead.
Good afternoon, Steve. Hi, Juma. Thanks for the call and the opportunity to sort of interact. The standard questions, if you could just elaborate on sort of the occupancy levels at Renaissance Village Dukum, some of the challenges you're facing. And, we've heard about three major players on the green steel sort of, either already mobilizing or in the pipeline. If you could just touch upon Mitsui, Jindal, and Vale. And of course, on behalf of the entire analyst community, with regards to the M&A opportunity, if you could just give us some more sort of details on that. Thank you. I'll start with those.
Thank you, Bishan. Yeah, so actually occupancy has been affecting us on two fronts in this quarter. Dukum, where we averaged 5.9 thousand occupancy for the quarter. Of course, that's an improvement on last year, but last year was at the tail end of the demobilization of a major project, the OQ8, and so there was still the occupancy mix involved a lot of seniors. We also had some military in at that time, whereas our core base occupancy, that's now a permanent occupancy, because every project that finishes leaves behind a permanent workforce. And of that 5.9, about 5.5 fall into that category, and they are in the shared dormitory accommodation, which is good revenue, although the margins are lower in that category. So that's affected us. We, on the terms of waiting for the next project, we at the moment, in terms of known commitments of people coming in, see this occupancy climbing to 7.4 thousand between now and the end of the year. That could increase substantially if a go-ahead to proceed happens within a couple of areas. So the green steel projects, our understanding is the Vulcan steel with Jindal is ready to go, subject to closing out the gas allocation. Mitsui and Vale ready to go next year. Again, subject to closing out that gas deal. So that's something beyond our control. We watch and wait with interest. We've had subcontractors of the Vulcan Steel project staying with us to do the preparation of the ground for that project and so on. But we're not factoring those into our numbers yet. We do have some military commitments, friendly forces with Oman who will be staying with us in the course of the year coming up. That will have a positive impact for us. Obviously, we're not able to discuss more of that other than to say that's happening. So the main issues for Duqm to make a significant swing will be the commitment of the green steel projects and an announcement for either the expansion of OQ8, the refinery, or an announcement of the petchem project. You yourselves are as capable as us of following the market on that. The news we hear is that both those things will happen. At the moment, nobody knows when. You hear rumors of announcements will come soon. We have to be patient and go through this period until once that happens, you've then got huge demand for beds then occurring over the next 3 to 4 years in Duqm. So at the moment, we continue to go through. We've come up from our low point. We're now at an average of 5.9 for the first quarter and looking to climb steadily with what we know at the moment. In terms of the oil field accommodation, our permanent accommodation for contractors, that fell to an unusually low point of 7.3 thousand during the first quarter. And now that's already come back up to 7,000 as we speak. We see it rising during the year to 9.3 thousand, about 93%. There are other things that are happening, projects that are being bid on the renewable side, etc., that could change that more positively. I'm just telling you what we physically see and know at the moment. But I must say both projects, Duqm and the oil field accommodation, operating well, going well. We just need to see stronger occupancy in them. In terms of the M&A opportunities that you talk about, obviously the detail.
You want me to take this?
Please, yeah, Juma, take up. Yeah.
Thank you, Bishan, for the questions. Actually, this is one of our strategy, and we have actually been very active in looking to M&A opportunity within Oman and outside Oman. And we have been evaluating few opportunities, and as we speak now, we cannot disclose more. And once we have a material information which can be shared, of course, we will announce to the market as per the regulation. But we have been signing NDAs when we are looking to few opportunities within the town and also within the region, inshallah.
Just to follow up on both your points, Steve and Juma, firstly, Juma, these opportunities relate to your core business, IFM itself. Just wanted that clarification. And Steve, with regards to Duqm, 2 questions. One is, what is the EBITDA and net profit break-even occupancy? You said it's currently at 5.9, should go up to 7.4 at year end. So if you could just throw some color on EBITDA and net profit break-even. Secondly, historically, one of the challenges Renaissance in Duqm specifically faced was with regards to, some regulatory hurdles from Sizad in terms of, fishing out, let's say, anti-ILO occupancy. How has that evolved? Where do you see that right now? And thirdly, if Jindal were to go through this year, hypothetically, where does that number go from 7.4 to? Thank you.
So I'll start for the first question. When we are looking to opportunity in our strategy, we are aligned to our integrated facility management solutions, where we are looking to both the accommodation solutions and the facility management angles. And we still open when we look to different angles, but should be within the surface sector where we believe we operate in the same field. We are not an investment entity. We are an operating company. So I hope that answers your questions. but it is, yes, in the same of what we know. So we have the know-how which we can expand on it, and we can grow in the know-how what we are doing. Steve, you want to take the other question?
Yes, and then I'll come back to you on a bit. So in terms of the accommodation issues, you're asking about non-compliant, non-ILO accommodation. We are not seeing a problem in that regard. The authorities have always been on our side on this issue, and the exclusivity agreement that we have. We did see that period of non-compliance after COVID. Everyone's got to grips with that. Non-compliant camps have been shut down and asked to remove. There's one camp left that is due to, it has a contract, it's an authorized camp, but that is due to expire in the course of the year, and it will then shut down and people will move to us. So we're not seeing a problem with that. And in terms of Duqm, CSAD are very clear that there will be no camps approved, that the approved accommodation is to UN ILO standards, Oman standard for workforces in that area. That is the standard that attracts the international investment for the major projects, and they are insisting on it. So we're not having a problem with that. In terms of the oil fields, where packs have been full, there have been some camps allowed, but then as those come round again, they get shut down and moved into the pack system. We, of course, expanded our packs with modular temporarily until Manazil comes round again. That's a tender that will be released later this year. And so we're, again, not seeing a case of non-compliance or leakage to non-compliant facilities. In terms of numbers, if and it would be more for Jindal and Vulcan, what I'm saying is not intended to be speaking for them, but there are different requirements for each of the green steel projects, and to our understanding, this one would require at peak about 3,000 people during the construction phase. And there's others that go up to 10,000. There's petchem that goes up to 20,000, and so on. So how much that would impact in this year would be dependent on how soon the gas allocation was made and they were able to start. So I can't give an exact number on that. I can just indicate what the peak would be. And a bit. Juma. Yeah.
So yeah, I mean, Vision, just to make clarity on this, our forum is not to predict the number for the future numbers or the forecasted number for the rest of the year, but overall, our accommodation services is producing very good margin, which is above 30%, which is in BDO and also in Duqm. So that's for us. If it grows by any mean, it will shift the number to different horizon than what we are looking. Wherever the surface businesses, which is it's the lower margin. So I mean, if you can see in these quarter results, even though we have grown in the top line, most of the growth in the contracting businesses. So this is why the result is not as bad what have seen in the earlier quarters. I hope I have answered your question, Bishan.
I appreciate that, Juma, but historically we've got some guidance in terms of net profit and EBITDA breakeven. Now that's a number that's internal guidance. I'm not talking of any.
You mean about Duqm?
In Duqm, very specifically, Duqm,
yeah.
any net profit breakeven and EBITDA breakeven numbers would be very helpful. We've got those guidances in the past, and those numbers have just have been improving quarter on quarter. Yeah.
Sure. I mean, I thought you meant for overall the company, but yeah, regarding Duqm is always a positive EBITDA, and Duqm is always being serving the financial requirement easily. So the level of if you look, we already over the break even points. So the EBITDA break even is at a level of less than 3,000 occupancy, and the BAT break even is around 7,500. So So we are approaching that. We are now at close to 6,000. So we are close to break even. And in terms of meeting the financial obligation, yes, we're easy. We are paying to the lenders actually upfront. So a Duqm company is operating very well. So as of now, yes, if the occupancy stay at this level, we might face challenges across the line, but the outlook is very positive. As Steve was mentioning, it's very positive, and we are seeing actually in the ground some of these positive movements. But when it's going to be materialized, what we know is what you know. So that's the case.
All right. Thank you so much, gentlemen. I'll wait in queue for further queries. Thank you so much. Wish you all the best.
Thank you, Bishop.
Thank you
Thank
very
you.
much. So I think we have Shaur now.
Yes, hi, good afternoon. Thank you for
Good
the
afternoon.
opportunity.
Please go
I
ahead.
just had a
Thank you.
question. Thank you. So in the most recent results, first quarter of 2025, we have seen a drop in your margins at gross and operating levels. The revenue has been consistent, and you guys have maintained fairly consistent margins close to 20%, or in the range of 18 to 20%. What led to this drop? Is it something that would carry on, or is it a one-off? If you could care to explain that. Thank you.
Yeah. So, Sharoor, يعني as was explaining, we have two kind. If you break down our business, two segments, which is the accommodation solutions, which normally create a good and big margin, and we have the services, which is the catering and facility management, which are lower margin. Actually, we have seen in this quarter a drop in the occupancy on BDO, which is the high margin segment. And we have started at the end of this quarter, we saw that it is growing back to the normal. So we are now operated at 70%, around 70% occupancy level, which is abnormal for us. And we are engaged with BDO, and we see many projects coming up, and the occupancy is growing. The second element which we are describing is at Duqm, so which is again we have explained it. And so those are the area which drag the margin down, and it is nothing to do with the fundamental. The fundamental is strong, and we see those numbers will grow. Maybe it is seasonal within the BDO project in the oil field, and in Duqm we see the outlook is very very shining. So that's what caused the drop. It's not something which the fundamental is only what we see in the occupancy level, which is our market risk. We are always handling this market risk, and some of them, part of it is beyond of our control. But however, we have fully engagement with our clients who are our partners in this field.
And obviously the revenue we generate per bed is lower in the blue collar shared dormitory style accommodation than in the executive single accommodation, etc. And there's a much bigger balance at this point in time until there's a major project on the go in terms of that. So the quality of revenue and therefore margin is different.
All right, right. That makes sense. So the reason that the revenue has not decreased, but the margins are decreased is because the quality of revenue has deteriorated somehow. Fine.
Yeah.
If you guys could, maybe for me, if you guys could explain what are your different projects. So you mentioned PDO, you mentioned Duqm. Would you be able to, give me the total capacity that you guys can hold in these projects? What are the total number of beds, and what are the current accommodation? You have already mentioned for Duqm, it's 5.9 or 6,000. What about PDO? And if you could, give me those numbers.
In terms of capacity, sure. The Duqm, and we actually talk about Duqm as having potential to take 20,000 people. Now that is if every single room takes maximum number of beds that it could take as a room, but that will never be the case. There will always be a variety of single, double, triple, four, etc. So the current configuration of bed layout is 18,800 as capacity at Duqm. And in terms of the PDO packs, we've increased our capacity at the end of last year, and that is 10,123 beds as it so happens. So at the moment, when we see PDI just gone back up to 7.7, there's still nearly 3,000 or 2,500 beds that could come in there in terms of potential capacity.
So the potential of growth in the revenue and the EBITDA is high if we are in video operating at 70% level. So there's additional room of 30% can be tapped into our financials if it is fully capacity. And in Duqm, we are operated at 6,000 level, and we have 18,000 occupancy. So this is what I'm saying in this accommodation solution. The potential is high. We always having this market risk of sometimes is low occupancy, but the potential is high, and it will be growing as far as the economic and the project will be more in those two areas.
Yeah. And it's a good question, Shaw, you're asking around our occupancy and our potential there, because our capacity in Duqm and in the oil fields has real potential for immediate short-term growth, as well as medium to longer term growth. So Duqm, we can see it can rise quite steeply with projects starting, but for it to get up to its full capacity, and you see 18,000 people staying there, we're not anticipating that until, depending on project announcements, 2026, 2027. So it's also got long-term growth potential for us. Again, in the oil fields, we can see short-term growth coming immediately from that downturn. It was already back up to 7.7 and climbing. But again, another project gets awarded. They're looking at some of the renewables projects that can add 200 capacity in the north, 450 capacity in the south if awarded, and that starts during the year, etc. And what is the case with these businesses is because you always see the sunk cost in our results. And therefore, once we get to higher occupancies, the only additional cost is coming in the variables. And so you get a much bigger flow and much better margins at the higher occupancies. So it is one of our real growth areas, but it's not our only one. You're focused on it quite rightly, because it can change things dramatically even in this year. But we've got these other areas. There's the M&A that Juma's already explained what we're looking at in answer to Bishan's question. But we see other growth coming in the oil fields with Manazil. We've described that to you before. We have 10,000 beds today. There'll be another 20,000 beds coming on into permanent accommodation market as a result of the Manazil tender when that comes. So in terms of medium to long-term growth, we've always been a successful, serious contender in those opportunities. So we'd expect to win a share of that. That's got real growth potential for us. And we should start to see the picture of that in the course of this year. We were awarded last year the PDO Soft FM for a year. And of course, we're now competing to hold that and extend it in a tender for a 4-year extension of that. We're looking at hard services there. So there's, again, immediate growth potential in the oil fields in terms of those opportunities, if indeed we are successful. And then we see other growth potential areas in our utility services business, in our waste management business, and in hard FM in general. 3 areas where we hold a smaller percentage of the market, but are scoring very high in terms of customer satisfaction KPIs and performance. So as those opportunities come round, we expect to see more growth there. So we're quite bullish about the growth outlook, and that hence the comments at the start of the thing. But you're quite right. The occupancy capacity is definitely one of the growth potential areas that we don't have to do anything more for than welcome those new customers in. Thank you.
We'll start with
Great,
Abbas.
thank you.
Abbas is raising his hand. So sorry, Sharon, you might be finished your questions, or we move to Abbas then.
Thank you. Thank you for the call. I joined a little late, so forgive me if some of the answers, that I'm asking you for could be repetitive. Can you talk about, I just read your chairman's report and you mentioned you're quite conservatively leveraged. Now, when I look at net debt to equity, what sort of room do you have, in terms of how much can you sort of take on at the debt level? That's my first question.
Yeah, thank you, Abbas. I mean, looking to our balance sheet, you are absolutely right. We are يعني we are actually very low leveraged, at less than 0.5%. We have a big room to grow, and this is why actually we are looking to more of organic growth and inorganic growth. So we are actually looking to opportunities within Oman and within the region. As have we started this, you missed my part of that. So our balance sheet is strong. We can go more than 150 million debts, and actually our balance sheet is still very strong. So that give us a big potential to grow. But knowing that M&A takes sometimes, we need to select the right M&A. You need to select the right opportunity at the right place, at the right risk you want to take. And the question was behind in the beginning, is what sector you are looking at. We are looking to the same sector which we operate, which we are strong on it. So we are looking to the same sector which we are doing. Thank you for this question. Actually, this is a good question, which actually we need to capitalize on our balance sheet, which is very strong at the moment.
Okay, and my follow-up question is, Steve, this Manazil, we've been through the whole 9 yards. When it comes to it, it was tendered and it was cancelled, and we've been talking about this for a long time now. I mean, what makes it different this time? I mean, what gets you excited about it at this stage? They because I remember they asked for certain bed, then they cut the bed, then they canceled the tender. Now they've reintroduced the tender. It's been quite the story with Manazil.
It's been quite a story. You're quite right. Now, in one sense, we've benefited from the cancelled tender. We've benefited from being given the opportunity to build these temporary expansions. Now, we need those temporary expansions to fill up, and the move of those camps is happening, but it's happening slowly. Manazil is now going to come out in a different way. It's first of all, the original Manazil was the PDO camps and the contractors' accommodation coming together in single units with a PDO section and a contractor section, some separate services, some shared services. That's changed. So there are going to be two Manazil tenders, one of which is we're not currently interested in because it's a pure construction play and we're not a construction company, where PDO has decided, because a lot of the PDO camps that we operate in 11 different locations, we provide the soft services for. Some of them are extremely old and need to be replaced entirely. Others have a mix of facilities that can continue to be utilized but need some things replacing. So that is coming out as a Manazil construction project, which instead of the Manazil private sector winner building, PDO will build that themselves. And the people who will operate it will be the soft and hard services service providers, of which we're currently the soft and currently competing for the soft and hard services. So that's, you might hear of a Manazil tender, and it's for buildings in the interior in 11 different locations for PDO camps. And across those, that's sort of looking after about 2,500 people, because on back-to-back, it's about 5,000 people work permanently in the oil field, but 2 weeks on, 2 weeks off. The second piece that will be another tender that will come out, in which we shall compete, it can be split into two sets of numbers. I'm going to round them both up to 10,000 because I can't remember the exact number. Where there are existing packs, there's about 9,800 odd new beds to come. And where there are no packs at all, permanent accommodation for contractors, there's about 9,700. So let me call it 10,000 in each case, approximately. In the first category, where there are existing permanent accommodation for contractors in 6 different locations, and remember, in 5 of those 6, we have either one of 2 packs or we have the only pack, as in Baja and Karnal. And there's one location, Lekwe, where we don't have a pack. So you will either, the winner of those additional 10,000 beds, or winners, because they can split it, will either be extending an existing pack facility, or if they don't own an existing pack facility, will have to build a new one. And therefore, it follows that those of us who are incumbent pack owners and operators have a distinct advantage. You don't need another reception, another clinic, and we've got roads and all the core infrastructure is already there. And therefore, we expect to be a very serious contender for those 10,000 beds or a share of them. The other 10,000 beds are in areas where there are currently no packs at all. These tend to be the smaller units. There were some larger populations, Harweel and Seyral, other smaller populations, Amal, Kautha, etc. In those places, there will be a new either modular or semi-permanent or permanent build of what they're going to call contractor camps, but they will have many of the pack facilities. It may not be 100% of the package, but it will be similar, and that will be greenfield for all the bidders. So there we have an equal opportunity to go after those 10,000 beds. In the prior category, we have a serious incumbent advantage where we should have only ourselves to blame if we're not a serious competitor for those other 10,000. And even on the new 10,000, we've always won the maximum that one could be awarded when the previous pack bids have come out. If you're allowed to win one of 2, we've won one of 2. If you're allowed to win one of 1, we've won one of 1. So we hope to compete for that. So it's real, Abbas. I understand the question because we've been on this ride for a long time. PDO, of course, been through a major reorganization as well, so they're reaffirming their position behind this. They've rethought it through in those 3 different categories that I've described. Sorry, it's a long answer, but it is a complicated set of 3 different levels of opportunity. Thank you.
No, thank you, Steve. Appreciate the answer. Of course, you've given us great perspective as always. When do you find out one way or the other, and what's the approximate annual revenue size that you're looking at?
Ooh.
If you know what I mean, just to make sense of these, of this opportunity.
Oh, well, okay. Annual revenue would be, if I knew specifically, would be giving away a competitive tender position. But we have 10,000 beds at the moment. Now they're not full. We're at 7,700 of them are full. And I think you're able to work out from before what sort of revenue the packs represent in our overall revenues. You've got a rough idea. Now,
Okay.
so in principle, you've got 2 sets of opportunities that can, I genuinely believe that Renaissance, no single bidder is going to win it all. And that, of course, significantly increases our chance of a win. But I see this as a real opportunity for us to double our position in the interior oil fields. That's what our aim should be. We've got 10,000 beds now. Let's get them full and let's win another 10,000 of what's on offer. Now, if it's 7,000, if it's not, then fine. But that should be our ambition, to try and double that business. In terms of the revenue, in expanding existing packs, we should be able to deliver economies of scale.
Yeah.
So the actual revenue might go down per capita for the client, but for us, it still represents the same kind of profit opportunity.
And Abbas, as I was answering the first question, our balance sheet is well prepared to accommodate any capex requirement for such expansion.
Yeah.
So that just to link the two together.
Sure, of course, yes. In terms of the contract services business, or the one that you used to call the contract
Sorry,
services,
could you say that one more time? We've got a slightly bad line here. Go ahead.
I said in terms of the earlier business, the contract services business, the Ministry of Health contracts, what sort of retendering is happening this year? What sort of market share are you defending? Where's the risk that you see this year in terms of, are you competing for 100% of the, are you already providing 100% of the facility which is being retendered? Sometimes you comment on this in the chairman's report. I just was wondering what's happening on that side of the business.
Yeah, so the actual contract services business, although it has much tighter margins, is growing. It's doing very well.
Yeah, and you can see in the revenue, in the top line, the growth comes in the top line from the contracting businesses.
Yeah.
And one of the major one of them is the BDO soft services for all the locations.
Yeah. So that's doing well. Now, to come to the specifics, we've already said that we're defending a lot of our incumbency, and Ministry of Health is a major one for us, because although it comes carved up into each hospital having separate catering, cleaning, laundry, pest control, etc. contracts, we've had an almost clean sweep of the board in terms of successful wins. And we've also, to really strengthen our healthcare credentials and capabilities, we're also at Sultan Qaboos University Hospital. We've been awarded this year, we announced it earlier on, the new Medical City Hospital. We've got the Ministry of Defence hospitals in Al Khud and in Salalah. So we're very, very strong, dominant player in soft services in healthcare. We actually see great growth potential in attacking and getting into the hard services side to a client with which we have a very strong professional relationship. Now, that said, it's a government set of contracts. It is coming out this year for retender. We are expecting that tender to come out sometime this month or next month. They're very diligent in terms of making sure that if another contractor was successful, that they would have time to mobilize and everything else. So it's getting tight on that, and pure speculation on our part, there could be a request for an extension to enable the tender to have it a full process. But as things stand, those contracts expire at the end of December. Where we've had some misaligned contracts, some smaller health centers and so on that have been bid at different times, we've been extended to the end of September. So they've brought the entire portfolio to be due to expire at the end of the year. So we've got to compete and compete well to retain the kind of share that we have. It's not a share that we can increase because we're sort of 99.9% of it. So we've got to work hard to retain that share and the quality of that share in terms of its contribution to our company.
I think Jos has raised his hands for
So is that fine, Abbas? Are we covered?
Yes, of course. Thank you. I just have last question on the school project. You can come back to it when you've asked the other gentleman raising his hand. I'm happy to come back. Just anything on the school project that you guys are working on.
Yeah, sorry. So this was the PPP on the schools.
Yes.
Yes, it's been cancelled.
Okay.
I think we've said that somewhere, and don't expect to pick up everything that we read. It's been cancelled,
Okay.
Which we're very disappointed about, and may come back out again. But it's a lot of work and a lot of cost that goes into a massive PPP bid. So when serious clients, and of course they're a serious client, I'm not suggesting anything different, do find a need to cancel these projects, it's very disappointing. And we have foreign investor with us on that project, and it does give us a bad name, and it sort of turns turns people against competing in those things. So we're really disappointed with that. If it comes back, we'll have a look at it. Our PPP projects bids in Saudi are still live again, and having another tweak of change of spec, but which is just going in right now. But we are expecting a result for that during the course of this year. Now, that result won't give us a contribution in the short term, but for the medium and long term will be a massive long-term presence. But that's, sorry, I've segued into the other PPP, but the schools, I'm sorry to say, Abbas, have gone. We'll go to Joyce then.
Yeah, Joyce, please go ahead. Sorry for keep you waiting, but that's how it goes. Go ahead, Joyce.
That's how it goes, right? So
Mhm.
good afternoon, gentlemen. Thank you for the opportunity, and thank you for the answers. I have a few follow-up questions. Steve, let's start from where you just stopped on the foreign operations that you have. Probably if you can throw some light on, what's your current strategy on the businesses outside, and how's the Saudi and UAE operations shaping up? Let's start with that.
Yeah. So in terms of foreign operations, I can be quick because we've actually, our foreign operations, where we've had huge projects, we worked on the World Cup, we've worked in war zones, but these are temporal major projects. In terms of actual businesses on the ground foreign, we're sitting in our Emirates Taste UAE business, which is a small but now profitable business. And when you've been through the learning curve with us when it took us a long time to get into that position. But that is where our foreign strategy is now clear. We believe it is not right to continue trying to break into markets organically, and that it needs a very careful, targeted M&A program that will, and we're looking at Oman, we're looking at the region, but I would say primarily UAE and KSA. We've got some opportunities that are live. We've got others that we've looked at, and it's not for us. So we definitely believe that we should be successful in securing. Now, of course, once we've done that, we've got to get through integration and synergies and etc. If we are successful in winning any of these M&A targets that we're looking at. But that's our actual approach to it, and we expect to break through during the course of this year.
Yeah, and just to tap in what Steve said, our strategy on the regional, it is a growth strategy. I can just brief it. We are looking aggressively to good opportunities in the region, and we want to grow inorganically. As Steve was mentioning, we have started a business for some times, and we know the market now in UAE, and also we know the market in Saudi Arabia. So we have a kick-off start already has happened for some years, and for now, it's an organic growth is the horizon which we are looking at.
Yeah, and the PPP opportunity in Saudi would be it's a separate individual relationship that would be a separate thing from if we were to find the right opportunity in KSA for an M&A win, then that would be a separate thing. Yeah.
Okay.
Thank you, George.
Thank you. I appreciate that answer. Another follow-up is on your PAC performance. What are the reasons for the decline in PAC occupancy for this quarter? And you said you're looking at significant occupancy improvement during the course of the year. So what are the drivers that will result in this occupancy increase?
So, I mean, I don't want to speak for our client in the sense of, there's been a very close look at the organization, a very close look at expenditure by the client. Some projects have come to an end, and there's not been new projects starting as quickly. So I think while so many great things are happening inside PDO, who's the ultimate client. It's the contractors who actually stay with us in the packs. The PDO people stay with us in their own camp in our soft FM contract. So as what they call the ODC off-plot delivery contracts came to an end, they demobilized, and the new ones are mobilizing in. If it's an incumbent who wins, then they tend to stay. If it's not, you have a transition, the handover, and the new people come in. And we've been through the big tranche of move out, and now you've got the tranche of move back in happening again. But there's always in the oil fields a set of temporary projects as well. So, for example, I'm not talking out of school because there's a live solar bid out that would be a significant development of the amount of acreage of solar in the interior oil fields. So when that's awarded, it would be temporary. It'll take a year or two of higher occupancy during that period while that's being built. And we're seeing less of those at the moment, but there's a lot out there that we expect to change. So that's what the changeover has been, Joyce. It's a period of lower activity, not lower activity in the day-to-day operation of the oil field, because actually there we're seeing, when again expecting numbers to come up with a plan to increase the number of barrels produced per day. So there's good coming, but we've got to go through this transition period with them. That's been the cause of it. Thank you.
Thank you, Steve. And on Dukem, when you say the average room rates have came down during the quarter and over the past, could you please quantify, what are the how much of this has come down, probably maybe compared to first quarter last year or even fourth quarter last year?
Sorry, Josh, you are talking about the packs or Dukum?
No, Dukem.
Dukum, there is, I mean, just to explain it for you, there is, we have what we call it as anchor clients, like the dry docks. So those are at preference rates. So the average rate per equipment, last year at 4.7, if I remember. This year is at 4.1. So even there is a growth in the number of the bid equipped during this year. However, that comes from the low margin equipments. So that's basically what we call it, occupancy mix didn't help on, even though there is a growth in the number of people who are staying with us, the average rate is lower than what we're comparing to the last year. Yeah, but it is neck to neck actually. If you look to an overall of Duqm, it didn't have impacted us in terms of an overall quarter to quarter results.
Yeah.
Okay, got it. And is there any other details on probably the timing, probably if it is coming in the summer? You said there is a friendly forces accommodation might come up during the course of this year. Is it going to be an exercise or something like which happened a couple of years ago?
So again, we have to be careful in terms of what we're allowed to say when we get advance notice of demand from our military friend. There are two aspects. One is, yes, we're expecting an exercise that will impact over September, October, November. So that will be there. That we didn't have in the first half. We had last year in the first half. So it's that we'll have that then. We're also expecting a long-term permanent demand of a couple of buildings. So that comes to pass, we'll be able to explain it better at that point. The other issue is that there are, again, this is temporary impacts, but they're very good when they happen. There's some large naval maneuvers going to pass by Duqm and actually use the port, etc. We have our facilities to support them while they are in town. And actually on the quayside, as well as busing people in and out to come and play football with us or cricket or any of those things at Duqm, and use our facilities. So we're expecting a temporary boost from those activities that have not been there for some time. And then those two other categories, one long-term permanent and one temporary exercise.
Understood. My last question is on the additional leverage that you have taken during the quarter. There is additional 9 million reals loan has been taken by the company, but when you have a cash balance of 16 million reals, so what was the reason for taking external borrowing instead of tapping into the internal cash balance?
Yeah, see, Jose, this is part of our treasury management. Whenever you see the borrowing is much cheaper than what you are depositing at, so that's part of our like cash management thing. So sometimes it's more wisely to borrow at very low rate than using your cash, which generate higher yield. So that's only a cash management things. Nothing fundamental on that. So there we don't have a requirement actually. So I hope you got the answer.
Yes, yes. And another question is it at the parent company level or Duqm level? This additional debt has come in?
No, actually, see, we can look. Normally, we are looking to our cash management and treasury management as a pool level, so we can borrow at any level. So that's actually give us a strength. This is why you see that we are not using our own cash, where we got much cheaper cash by taking short-term loans just for a purpose of cash management, or you can call it treasury management for to create a delta out of what we have. I mean, deposited in the banks and in the money market fund and other fixed income instruments.
Okay, thank you. Highly appreciate your answers. Thank you very much. Wish you all the best.
Thank you.
Thank you, George.
So we're coming to the end, looking at our time. We always try and manage this within that hour, which is actually thanks to you guys and your succinct questions rather than some of our rather long answers. I don't see any further hands up. We'll give it half a minute in case anyone has a final question. But I'll use that minute to thank you all for your continued interest. It's always a great pleasure for us to spend this hour with you every quarter. We really appreciate the scrutiny, and we appreciate the level of your knowledge and interest in our company. It means a lot to us, and we always look forward to it, and we'll look forward to seeing you again next quarter. No hands have gone up while I've been giving you that vote of thanks. So on that note, from Juma and myself, thank you very much.
Thank you very much.
And
Thank you.
goodbye. Thank you.
Thank you, guys. Thank you.